Oracle is down 11.3%. This is Thursday, the 11th of December, 2025. Pre-market session, intraday low 192.71. Yeah, this printed yesterday, the post-market session when it did close its earnings outcomes. But before that, it actually printed an intraday high of 231.17. So it was quite a volatile session yesterday, the 10th. Let's get a sentiment around what's going on.
Oracle is trending sharply downward as investors digest its latest earnings report and forward guidance, sparking intense debate across the trading community. While the quarter delivered strong top line performance, the results fell just short of Wall Street's expectations, adding pressure to a stock that was already pricing in aggressive AI driven growth. Oracle reported $16.06 billion in revenue, representing a healthy 14% year-over-year increase, but still missing the $16.2 billion consensus estimate. That slight miss, paired with cautious tone around near-term margins, immediately fueled concerns about whether Oracle's massive AI bets are delivering returns fast enough to justify the stock's premium valuation. A major flashpoint in the community is Oracle's explosive ramp in capital expenditures. The company boosted its capex plans by another $15 billion, bringing total expected data center spending to $50 billion for the year. That marks a 40% jump, almost entirely driven by continued demand for AI infrastructure and the race to scale capacity for high-performance cloud workloads. For some investors, this signals conviction and long-term positioning. For others, it raises red flags about ballooning costs, debt levels, and possible strain on free cash flow. Still, one of the most eye-catching numbers was Oracle's remaining performance obligations, RPOs, essentially signed revenue not yet recognized. RPOs skyrocketed to $528 billion, an eye-watering 438% surge year over year, and a substantial jump from last quarter's already impressive $455 billion. Bulls argue this backlog showcases overwhelming demand for Oracle's cloud and AI services, providing long-term revenue visibility few companies can match. But bears see it differently. Some traders warn that large RPO figures can mask execution risk, pointing out the growing gap between contracted revenue and actual realized results. Others question whether management is overextending, drawing comparisons to past market bubbles, where companies aggressively front-loaded spending in anticipation of future demand that didn't scale as expected. As the stock pulls back, sentiment is deeply divided. Dip buyers believe the long-term uptrend is still intact, citing Oracle's entrenched enterprise relationships and enormous AI-related backlog as reasons to accumulate shares at a discount. Skeptics, however, worry about potential analyst downgrades, rising debt, and management's ability to execute in an increasingly competitive AI cloud landscape. With big money on both sides and the AI narrative reaching a critical inflection point, Oracle has quickly become one of the most polarizing names in the market. Its next move likely to set the tone for how Wall Street values AI infrastructure plays going forward.
Okay, so that's what we're looking at right now. A dip of around 50. We've been able to break down some data from all that is going on right now. Let's see what we have. I will just begin with the key decision points. Okay. Let's see. Current stance: the market is in a bounce decision zone. The positive second derivatives suggest downside momentum. This is the derivatives of its price pressure momentums. Okay, so one derivative shows buying pressure, and then the second one shows the pace. Okay, so the short-term mean reversion trade. Okay, we'll see that later on. Okay, okay, let's see now. It offers a better risk reward. Okay, while the long-term setup requires patience for structural improvement. Okay, let's see now. I think we just have to go up and begin from the top. Okay, so this is these are the price pressure momentum values. Obviously, given that the stock is down 11% or thereabouts, the price pressure momentum, which measures the angle of attack of the various moving averages. The moving averages in this case are the 10, 21, 40, and 200. So they are all negative, all of them negative, including the long-term 200 period moving average. Okay, this is based on its 4-hour chart. So we can see here, even though the 40 period moving average, this one is negative, severely bearish. Its derivatives are all positive, indicating positive momentum is building. And that is also the case with the 40 period, 20 period, 21 period moving average. Derivatives are all positive. On the 10 period moving average, which is the faster of the moving averages, it has a robustly positive second derivative, so strong positive acceleration bottoming process beginning. So the market grid gives us a range of prices within which the stock has the potential to trade in. Okay, so these are the values. This is the top of the grid. Okay, and then this is the bottom of the grid. So if it's in this zone, pointing downwards, then there's a good chance it may continue to print lower prices. So let's see now. I really can't see I can't see the direction. Okay, the direction is just neutral. I think it's just neutral as things stand right now. Okay, so these are the probabilities of it and the time frames. Okay, so we have a couple of trade setups, but they are not recommendations at all. We have here strategy mean reversion long. Okay, obviously this is because you can see here the 40 period, the stock is trading at a discount all of its moving averages, and the closest moving average is the 40 period moving average. So that mean reversion is referring to that it's with reference to that 40 period moving average. So entry zone will be 193.65 to 196.61. Okay, it's already out of that zone, so this may not this trade may have if it happens, then that opportunity may arise. Okay, your targets will be 201.03, 205.17, 209.30, and these are the probabilities. Stop loss will be 191.50. Okay, rationale is that the second derivative across the PPM1 to 3, that is the price pressure momentums from the 10 to 40 period moving averages, indicate momentum exhaustion. Okay, and then the extrapolation of its 40 period moving averages is forecasting to 205.65 supports the bounce. Okay, risk factors, fundamental headwinds from earnings slash guidance. 200 period moving average remains negative, long-term bearish context. Breakdown below 190, breakdown below 193.65 invalidates the setup. So this is the long-term setup, 3 to 8 weeks. Okay, it says here entry, wait for confirmation. Daily close above 201.03. Price pressure momentum turns positive, currently negative, currently severely bearish, and our price reclaims 210 for 2.20. Okay, entry zone will be 202 to 206. Your target will be 210. The second one 216. Third one 220. Okay, these are not this trade setup is not a recommendation at all. Okay, if you try it, you may not succeed. Okay, so let's see now. Rationale is that the extrapolation of the 40 period moving average at 210.20 suggests mean reversion to the 40 period moving average. Positive first derivatives on the price pressure momentum 2 and price pressure momentum 3 show momentum shifting. That is the price pressure momentum of its 21 and 40 period moving averages. Okay, yeah. Yeah, we're really seeing all of these. So that's what's going on right now. We didn't pick up projections here. We have 220.47. Yeah, yeah. It has ample room to the upside. So I can't exactly say that I'm confident about buying this dip or anything like that. Okay, so we'll see how all of these pan out. And thank you very much for watching this video.